Great. Well, thank you guys for joining us for the last track on emerging trends in technology. And I think as Ashwin touched on, and certainly came up in the prior panel, there's never been sort of quite this rapid a pace of change and consumer behavior happening in the financial industry, and it's probably the confluence of a lot of interesting factors, a huge sea change in what customers are expecting, and certainly some technology changing both at the customer experience level, all through how banking is actually conducted, and also some really interesting things changing in the regulation and legal landscape. And fortunately today we have just the panel to discuss all of that. We've got people who are pursuing disruptions at all three of those layers in the technology stack of financial ecosystems, and I wanted to quickly introduce them now. So right next to me we have Nilesh Dusane, who's Vice President of Sales and Client Relations at Ripple Labs. Excited to hear from him about what's really happening with the blockchain and to talk about how that's going to be changing financial technology today and in the years to come. Sitting next to him, we have the Group CEO and Chairman of Mastek Limited, Sudhakar Ram, who joined us all the way from Mumbai, so very excited to have him here, and also talk a little bit about some really interesting developments in the regulatory landscape there and what that's going to be doing to the way people pay in India. And finally, we have Hitesh Anand joining us from Verifone, where he is looking at mobile and commerce enablement as Vice President, and really excited to get his perspective on what changes in smart point of sales are going to do to the way that we pay, and a whole lot more. So with that, I thought maybe we will just jump into it with you, Hitesh. For those of, a quick poll of the audience, how many people are working in financial technology today? Oh, that's quite a bit of you. Or are working on a startup in financial technology? Plan to in the next few months? Okay, great. We've got some entrepreneurs there in the mix too. So certainly, I think much like waiting for artificial intelligence to change the world, I think we've been waiting for point of sale systems to evolve, and there's been a lot of speculation and excitement about what's going to happen in the future of commerce and payments. As you think about that in terms of the products you guys are bringing to market, but most importantly, the opportunities for new disruption that a world filled of smart point of sales is going to create, what are you excited about?
So I think one of the things, so before we start about talking about turning terminals or point of sale into smart devices, we have to understand that today payment is highly regulated and is highly secure.
I think maybe just closer to it.
Yeah, so the payments is highly regulated and it's supposed to be highly secure. So there's a plethora of regulations around and standards around PCI and PCI DSS on making a payment terminal secure, right? And so the world operated in that model for a long time. And then comes along a consumer with a smart device where he is able to interact everywhere else. But when it comes to a physical retail, he comes back to the technology of the 20 years ago, right? So he interacts very well online. When he goes online, the merchant knows his preferences, what he shopped. When it comes to physical retail, retailers are completely clueless. That is what we are trying to change. We are trying to take the terminal of old, single-purpose payment terminal, keep the secure piece, payment piece secure, and then open up a sandbox for third-party applications. When I use the word apps on a terminal, people think, how will apps run on a terminal? Will somebody be clicking, I go to Whole Foods and tap on an icon? No. Apps are going to be on a terminal very seamlessly consumed and positioned. So think about today, when you go to Whole Foods, at the end of the payment flow, you're asked about, do you want to donate for the earthquake in Nepal? That is an app. But that app had to be done by Whole Foods as part of the payment flow, had to go through certification every time they had to change the word Nepal to Haiti, for example. And that's what we are going to change. So that is a change Verifone is going to bring, open the terminal for third-party apps that are going to be contextual as the user is going through the payment flow. And the example of that, what we have done is with the likes of Apple and Google using their wallets for third-party VAS services, like coupons and loyalty.
That's interesting, and I think we're gonna, I think one of the things that we've talked about is in each of these different markets, there's different needs that are going to be enabled by new financial technology. And so certainly, in the United States, we're wondering, when can we pay with our watch? When can we pay with our smartphones? But, you look, a lot of us in the audience are US-based, but looking abroad and around the world and looking at potential opportunities, and you still see the preponderance of cash in other countries. And Sudhakar, what do you see? One of the interesting developments that happened in the last month is the Reserve Bank of India is working on pushing yet another update to making real-time payments and transfers between bank accounts ubiquitous in the country. What do you see that catalyzing in India, and what are you excited about?
So actually, it's very exciting times in India. The background in India is 96% of retail payments is in cash. So there are more than 1 billion payments happening every day where people have to use cash. Now, with the kind of technology that RBI has implemented through the National Payments Corporation of India, all the banks are this is going to happen over the next few months or years. All the banks in India are connected to the settlement network where 24/7 you can have an immediate settlement of a merchant payment transaction. So debits the customer account and credits the merchant account, or a peer-to-peer payment where you're transferring money to your friend. So this is the kind of thing which very few countries, or I can't think of any other country which has this kind of infrastructure. There was an earlier version of it which was a bit more kludgy and very difficult to use, but now with what they call as the unified payment interface, it's really going to revolutionize payments. And in a country like India, first, the cost of cash is very high. The Reserve Bank of India estimates it to be about 20,000 crores, I'm sure, for the banks, and merchants and individuals spend another 20,000 crores a year in moving cash. Second, at the village level, today, there is government programs like Jan Dhan Yojana where bank accounts are being opened and subsidies are being transferred directly to the villagers. But I have money as a villager. If I have money in my bank, I have 500 rupees, but the nearest ATM is 20 kilometers away. It's going to cost me 50, 60 rupees to go collect that money and come back, and I lose half a day wages. So it's not a very viable thing in terms of using. So digital payments have the potential. How fast it happens, we have to see, but they have the potential of completely transforming the way a villager or a person at the financial inclusion level can deal with cash. So it's opportunities across the board. Like the biggest use case for, e-commerce in India got popular because of innovation called cash on delivery. I don't know how many of you are aware that in India you can order without a credit card, and then when the courier comes home, you pay for it. And that's become the biggest problem for for e-commerce companies now, because they're dealing with so much cash. So with this technology, we can make cashless on delivery. We can look at financial inclusion, and that's something that can really transform the way payments happen in India. So,
well, that's interesting. So I remember Ashwin saying that we're all going to be disappointed with his talk, which was actually fantastic, because we weren't going to talk about the blockchain. But fortunately, Nilesh has been looking at that. And one of the things when we think about delivering new financial experiences to consumers, you have to change some of the underpinnings, the financials of how it works. But I think that we also sometimes run the risk of very frothily getting excited about a technology, first Bitcoin and blockchain, and sort of skipping the key question of what really does it disrupt? What does it do so well? And so as you and Ripple have been thinking about it, what is it that you think blockchain technology really can change in the financial system today?
Sure. So Ashwin, towards the end of his session, was talking about, forget about payments and accounts. What we should really focus on is solving a customer problem. And I'm going to give you an example of a problem that I just found out I have 2 days ago. So my job needs me to travel all over the world, and I just came back. I was in Toronto a couple of weeks ago. And thanks to the notification, I found out that I've gone over my plan by about $600. So now I have to justify to my boss or my VP of accounting as to why did I go over my plan by $600. So here's a problem, right? And what I'm thinking and what at Ripple we think about is when we buy a plan, from our cell phone carrier, it has an inherent value associated with it, right? So you buy a $200 plan, $100 plan, whatever that is a value store. What if there was a way where when I was in Toronto and moment my cell phone found out that I was about to go over my limit, what if it paid $10 or whatever to somebody who's living in Canada, has gigabytes of gigabytes in their rollover minutes, which are ultimately going to get wasted. And what if my cell phone could pay that cell phone $10 and use their data plan instead of me having to pay my carrier $600? So that's what we call as, we at Ripple think about as Internet of Value. So let me explain what I mean by that. So Internet of Things is a pretty big theme over here. There are a lot of reports out there which say about 50 billion devices are going to be connected to the internet over the next 5 to 6 years. And even if a small fraction of those devices want to transact with each other, you need a system, you need a technology which can do micropayments, which can do really, really small dollar payments. And there is no centralized system out there today which can do that. And let me explain what we mean by that. So we go back 30, 40 years ago, early days of the internet, when, and think about how the publishing industry was at that time. It was a centralized system, right? Where somebody used to write a book, go to the publishing house, they used to publish, print it, and then sell it to the consumers. With the advent of internet, which is a distributed technology, anybody can write anything, publish it on a website, and consumers can see that content. So we went from a centralized system to a decentralized system when it comes to information exchange. Now, why didn't value or why didn't payments did not go down the path of using internet technologies? So for those of you who are technical experts over here, we've all seen this 404 error code, right? We go to a page, website which doesn't exist, there is 404. That was created 25 years ago. At the same time, they created an error code called 402, which was for payments. When a payment fails, we were supposed to see an error code 402 on our browser, which we've never seen until now. Why? Because the world did not know how to do value confirmation or confirmation of financial transactions on a point-to-point basis. So if you think about electronic payments, the way they've been executed between banks over the last 30, 40 years. And I'm not talking about things that happen at the top of the stack, but how banks exchange payments with each other.
And really, we're talking about this, especially as you and I were talking about this, it's in this international context. When you have people in two different countries that are looking to exchange value, right? Mm-hmm. And there isn't a government sitting in between them, or there isn't something else that can short circuit these transactions. That's when this really need comes up to sort of confirm a payment and complete.
When it comes to electronic payments, you always need a third party to confirm that an electronic payment has been confirmed or completed. Blockchain, and I'm specifically using blockchain, not Bitcoin. Blockchain is a type of technology which can confirm that a financial transaction has occurred purely on a point-to-point basis by using a distributed network of servers or computers. So you basically eliminate the need of a central third party to make that payment. So if you think about any payment globally, you always go to your bank, then it goes to your central bank, and in some cross-border instances, it goes to correspondent banks. And what we are trying to do at Ripple is, how do we optimize the path in which payment goes from one bank to another bank in a distributed manner so it can support additional types of payment needs, such as micropayments or what we call as Internet of Value, where you can go from one value store to another value.
So that's cool. So there's in a way, it changes the way that, it lets parties trust each other, and it creates some new fabric that's going to enable some types of payments at the foundational level. Mm-hmm. We've heard about some changes that are happening at the retail level, the point of sale. That's creating some new disruption and some new regulatory opportunities. So I want to, given that this is TiEcon and that, we've got a handful of folks in the audience that are trying to create new startups, let's turn ourselves from their perspective and say, given that all these disruptions exist, right? What would be some of the, there's the financial industry is really unique in that there's some really hard obstacles to overcome. We talked about regulation. I want to touch on another one quickly, which is just building consumer trust and changing consumer behavior. We're all habituated to swiping a credit card here. It's hard for us to justify, pulling out our phone to do something that's not really broken today. And so in each of these areas, in the way we're transacting, in the way in getting banks to change, how do you, when you're looking at a new potential startup idea, how do you think about changing consumer behavior? How do you think about building trust in adopting something new when it comes to people's money? Maybe Hitesh, we could start with you. Have you guys thought about it?
Yeah. So I think one of the fundamental things as a startup to look at is what is the pain point you're trying to solve,
Sure.
right? And technology, I hear blockchain, really good technology, but you have to figure out what is the pain point you solve for that you're going to use it for, right? To give an example, so 5 years ago, we were at Nokia trying to launch something to do with financial space and mobile phones. We didn't know what it was. And as we looked through the gamut of problems consumer had in different markets, we realized that in emerging markets, there was a very clear lack of electronic money. Mobile phones were just coming up, and people would buy expensive phones with cash, but they had no way of adding to it. They had no way, even in those days, there were apps in Java apps, but they had no way of adding stuff to the phone because they didn't have access to electronic money. And that's a fundamental problem in large part of the world even today, right? And so even as mentioned here, today in India in e-commerce, cash and delivery, right? So the problem is not people don't want to buy on e-commerce sites. The problem is they don't have access to electronic money. So that's the way to look at a problem and solve for it. Technology is just an enabler. You may solve it, but it's funny. You can solve same problem by different ways. Elegant technology will not make you successful. The elegant way to solve the consumer's problem and experience will make you successful.
Sure. So Sudhakar, do you see, if 96% of India only trusts cash today, right, and are making payments that way, what's it going to take for, mobile wallets to actually get any substantial traction? Is there something that you see?
It's already happening there, Alok, because if you see the base, India has hardly about a few tens of millions of credit cards. And while there are a lot more debit cards, they're all used only for drawing money as an ATM card. So if you see the wallet penetration, suddenly over the last 18 months, has gone up from somewhere in a few million to almost 100 million. And it's happened because it's ubiquitous. It happened due to the kind of incentives that wallet companies have given wallet companies with deep pockets. But we have seen that behavior change happening, and there are almost 1 billion wallet transactions happening every year now in India. So if there is a attractive enough use case, and if there is a real pain that is being solved, then even at a rural level, adoption will happen. WhatsApp being a classic example, that a farmer in India uses WhatsApp, and it's a lot of it is happening through images rather than through words or text. So,
yeah. Okay, well, since we've got a few minutes left, first of all, any questions from the audience? Ooh, we've got a number. Let's, sure. Oh.
So this question is very specific to blockchain, especially for Ripple. Are you guys planning to have your own private blockchain? If not, if you're going to use the public blockchain, which already has, which has known issues. At the end of the day, it's like software code. So you have the 51% attack problem. You had the quirk of transaction malleability. So are you going to have your own private blockchain or banks participating, or are you going to use the public existing blockchain?
So our technology is a little different than blockchain. It behaves like blockchain in the sense it's point-to-point confirmation of transactions, but we believe in interoperability. So our technology, Interledger Protocol, enables one blockchain to communicate or interact with another blockchain or another ledger in the context of a transaction. So to give you a specific example, let's say you want to pay to somebody who lives in China on their WeChat account from your bank account here in the US, our technology allows you to do that. So we believe in interoperability rather than one specific ledger or one specific blockchain.
So if I understand you correctly, it's an exchange and not an independent blockchain.
It's a protocol for payments.
Like TCP/IP.
Like
Like
TCP/IP.
TCP/IP, right?
Yep.
Before that, they were individual
Exactly.
networks.
Mhm.
They-
Yep, that's right.
So,
Oh, sorry. Let's go here quickly.
okay, you're talking about consumer trust and behavior change. And my question is about India, when you talk about the cash on delivery being dominant there. So even if technology like UPI does make it a lot more convenient, but when the goods arrive at a home, what is it that will motivate the consumer to actually use an electronic payment versus the convenience of cash that they are really used to doing it? So what is it that will change the behavior?
And let's also just clarify for the audience here, UPI is the new real-time
Unified Payment
Unified
Interface
Payment Initiative.
of India that Sudhakar referred to.
So I think cash is not very convenient because more often than not, when a courier guy comes home, and these tend to be fairly expensive for an Indian family, you don't have so much cash at home. So you have to remember to go and draw money from the nearest ATM. So it's not a very convenient way. But today, the lack of trust in e-commerce is high that people are willing to suffer that inconvenience and do it. So we believe that solving this problem, UPI is just an infrastructure. So at Mastek, we have created a startup called Cashless Technologies, which provide the digital platforms to make this payment happen. So we have a platform called Bina, which will help customers make this payment without any of the problems of having to have cash at home, having a problem of change with the delivery guy, because you have 2,000 rupees and the thing is 1,650 rupees and he doesn't have change. So all those problems, as we see that electronic payments will make life much simpler for the agent. And actually the user experience, which is where we come in. How do we create a user experience where it's much quicker, much easier than cash, and it's much safer than cash?
Sure. Thank you.
Great, let's go here. And then I'm going to pump our panel for that brilliant last unicorn startup idea they have in each of their areas. But
Right. So I just had a couple of quick questions. One for Nilesh is, do you view the latency and throughput restrictions in blockchain as a killer, or what is your take on that?
Well, it's an issue with any centralized system, any ledger for that matter, right? Blockchain at the end of the day is a ledger, and scalability. If you think about having millions and millions of transactions going per second through any single ledger, it's blockchain or anything else, it's going to have its scalability scale issues. So what we are trying to do in Ripple is, we don't believe that the whole world is going to use one ledger or one blockchain. There are going to be individual networks, and we believe in making them interoperate with each other. So you could have a Visa network, for example, which can transact with a blockchain network or with a PayPal network or whatever the case might be. So centralized systems have their limitations in terms of scalability, no matter how sophisticated they are.
Right. And I guess a quick question for Sudhakar is sort of, what do you think the open opportunities are in the India stack financial application regime?
I think it's just restricted by people's imagination. You have a billion cash transactions moving to even 500 million electronic transactions is such a huge opportunity. I don't think any other part of the world has that amount of possibilities. So it's left to individual imagination, but the next 5 years are going to see a remarkable transformation in the way payments are done in India. So.
any other questions? Otherwise, we'll quickly ask Hitesh as final remarks. So now that this exists, what if you were to switch sides and go start a company today?
Sorry, another question.
Oh yeah, sure, go for it.
Sorry to interrupt the conclusion.
No,
of this.
no, not at all.
So, looking at the banks, the incumbents, they have a lot of power in the market. They have a lot of power over regulators and how the overall system works, and a lot of I guess incentive not to change a lot of how they operate. So how do you see yourself being able to overcome that deeply held power of the incumbents that, if anything, since the crisis has gotten probably even stronger?
Well, consumer behavior drives everything, right? So Uber is pretty popular over here. They hire drivers all over the world, and they have a need to make small dollar payments, $1,000, $2,000 to Japan, wherever. Today's wire infrastructure is not set up to do that. They are pushing their banks to say, hey, I have this need of making small dollar payments. Why don't you come up with a different way and an efficient way to let me do that? Which is why banks are looking at different ways of including Ripple, making those small dollar payments. So consumer behavior is a very, very valuable tool. And in the for those of who have worked with banks, we joke about it, but basically banks or any other incumbent, they are motivated by only two things: fear or greed. And you pick whichever you want, and that's how you get these guys to move. Very simple.
All right, thank you.
Sudhakar or Hitesh, do you guys have any other?
Yeah, I just want to add one point, right? When when you use the word banks, I think we are so US-centric in our focus and thinking that we look at, we use credit cards all the time. We never think about anything but a banking infrastructure here, right? But the rest of the world doesn't rely on the banks, right? And that is where and they always leapfrog. They'll leapfrog. The emerging markets went from having no landlines to smartphones. They leapfrogged a huge whole generation of communication technologies, and that's where the value is. So in some ways, the new FinTech innovation is going to happen outside the developed markets and then percolate in here.
Completely agree. And in terms of other opportunities, clearly, I think I heard Bill Gates once make a statement saying that while banking is required, banks are not. So the whole business of banking is so complex, and they offer so many portfolio of services which need not actually be rendered by a single company. So I do expect banking to get disaggregated into individual microservices, and that's an opportunity for people to get into and disrupt banks. So that's another area.
Well, that's fantastic. Well, I think with that, we're out of time. So we'll give a round of applause to all of our panelists.